Hi guys, welcome to episode 28 of the Fire Fund Friday series. We had an absolute bloodbath in the market this week. I hope you guys were able to stay calm and not sell. There were not many stocks I wanted to buy this week because everything was melting and just kept on melting. It's not a good idea to catch a falling knife. We let the market crash around us and hold our cash. I will say it is okay to nibble just a little bit to lower your cost basis, but spread out the purchases over time. You'll be very upset if you blow all your cash and the market continues to fall, but it also does not feel good if we miss the dip. Dollar cost averaging is your friend. I personally buy a little bit when the price is below my cost basis and if the current stock price is lower than my previous purchase prices. I also have my weekly budget, so I know how long my funds will last. Here's a tip if you're looking to buy. I've been waiting for either midday or right before market close to buy in because stocks have been dipping into the close the last few weeks. It's been allowing me to dollar cost average in during the daily lows. So that's my methodology. Now let's go check out our purchases for the week. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. Alright guys, this was a bad week to purchase stocks in general, so I really just stuck to my core stocks because they drop a few cents a day and they are well below my cost basis. The only exceptions I made were for QYLG and a new stock you guys have not seen me purchase before. That stock is SCHD. I've been looking at other stocks to buy after I finished buying Horizon Technologies and CIM. SCHD seems like a good choice. Let me go over this stock with you guys real quick. This is a Schwab ETF that tracks 100 quality dividend paying companies. The reason I chose this ETF specifically is because of its excellent past performance and because its diversified holdings have more exposure to consumer and financial value stocks, which I own very little of in my own portfolio. If we look at its top holdings, we can see pharmaceuticals, consumer products, and communication stocks. The only stock I personally own on this list is Coca-Cola, so as I build up this position, I will get exposure to quality companies in all new sectors. Then, if we look at its past performance, this fund is over 10 years old and has provided excellent returns. It's averaged 15% annually for the past 10 years. That's double the normal benchmark of 7 to 8%, which is considered the market average. And to top it all off, it's a great dividend growth ETF. We can see its dividend has increased year over year. I have been wanting to get back into the stock, but I only let myself purchase one share. And good thing too, because it was way too soon. It broke under the $80 price point and I thought it was a good point of entry, but I was very wrong. I will let the market continue to dip before I even try to pick up any more of this stock. The one share I did buy brings the total in the portfolio up to 9 and increases our annual dividend income by $2.24. SCHD was not the only stock I bought too early this week. I also picked up 5 shares of QYLG as growth stocks melted down around us. I need to hold off on this until things stabilize, but that does not look like it's going to happen anytime soon. The 5 shares of QYLG I did pick up this week brings the total in the portfolio up to 16 and increased our annual income by $15.42. Besides that, I stuck with buying my core stocks this week. The goal of this portfolio is to build up a large position of QYLD and RYLD, so I'm looking at this market turmoil as a fire sale. These two stocks also drop less than $1 a day, while most other stocks are shedding all their gains. This allows me to slowly dollar cost average a few shares a day without worrying about it dropping massively right after I purchase. So when RYLD dipped into the low $23, high $22 range, I saw that as a great opportunity. I spent $785 this week to pick up 34 shares, bringing the total in the portfolio over 300 shares and increasing our annual dividend income by $91.62. Then we had QYLD dip below the $21 mark, which I've not seen in quite a long time, so I jumped at the opportunity. We picked up 32 shares for $680, which also brings the total shares in the portfolio above 300 and increases our annual dividend income by $80.47. For next week, it looks like I need to be hands off of any growth ETFs because this market is showing no signs of improvement anytime soon. So more RYLD and QYLD, I guess. I am also looking at XYLD, but we will have to see if it drops any further before I can enter. It looks like this week we got a little bit too excited and went over a $1,500 budget, spending a total of $1,697.51 on stock, which increased our annual dividend income by $189.75, which brings our total annual dividend income up to $4,097.33, which is a growth of nearly 5% over last week and bringing us 1.58% closer to our goal of $12,000 per year of annual dividend income. Our annual income is growing so fast now. Our next big milestone will be the 50% mark, which is $6,000 annually. It's a good thing we have our large cash position. If we are in for a March of 2020 situation, I will be ready to buy this dip. I just have to stay disciplined and stay within my weekly budget so I don't burn through all this cash before the dip is over. And that's it for another Fire Fun Friday. I hope you're all holding and buying more. Let me know what you're buying during this dip in the comments below. And if you haven't already, please consider hitting that like and subscribe button to follow along as we watch our money burn away. As always, thanks for watching.